So, as we can see, pawn loans have spiked due to economic uncertainty. This article is attributing it to high gas prices, but the question is there something more to it than just high gas prices? Because as we know, this phenomenon has been going on prior to this energy crisis and prior to the war in Iran. But without further ado, let's listen to what this clip has to say.
There has been a late stage economic stress signal building for quite some time now, and it's gotten very little coverage. I want to discuss it today. And what I want to talk about is pawn shop loan growth. It is, folks, a late stage stress signal, not an early one. And let me explain why, and I'll share a story that was posted late last week that's trying to explain this away with the recent uptick in gas prices. And it misses the entire point. So I'm going to share a story with you about the stock price of the biggest pawn shop operator in the United States and what it's done since going back into early last year. So early cycle economic stress signals, especially with consumers, shows up in the use of credit cards. You see it through people using home equity lines of credit, HELOCs, refinancing options. That's the early stage stress signal. They don't have the money to pay for everything outright. The mid-cycle, you start to see people taking up personal loan offers that come in the mail. They start to use buy now, pay later more frequently. And they use balance transfers from cards to card, trying to keep all the balls in the air. But the late cycle stress signal is use of pawn shops and use of, correspondingly, you see the payday loans, people basically liquidating their assets to raise enough cash to pay their bills. And what it means, and it's happening right now, is liquidity is gone. Households have run out of options, and what they're doing is they are survival borrowing, not consumption borrowing. And that's the shift that's going on right now.
Now, what's interesting about this is that once upon a time, this would have been exclusive to a particular demographic, i.e. lower income or middle income people. But we're also seeing high earners engaging in this sort of behavior, which is suggestive of the fact that potentially worse times are to come. We're seeing Audemars Piguet's, Rolexes, Patek Philippe's being pawned. And this suggests that folks that have these things were high earners or potentially are high earners, but inflation and cost of living has just caught up with them and they can't get access to credit. They can no longer increase their credit card borrowing. As we know, credit card borrowing is at an all-time high, $1.8 trillion in the US as of today. As we know, credit has tightened, meaning it's harder to get access to credit for everyday people, including high earners. And I think this is indicative of what's to come. But let's hear what else he has to say.
So pawn shop activity rising again today. It confirms what's happening. Tightening consumer credit, rising delinquencies, and pressure on lower and middle income households. The story I'll share with you says you have higher income people coming in with expensive watches now and things of that nature to raise cash and borrow money. But in 2008, this exact pattern arose during the Great Financial Crisis. Between 2008 and 2010, the largest publicly traded pawn shop operation companies, Fast Cash Financial, Easy Corp, and Cash America, they had huge revenue and loan growth and also appreciation in their share prices. Those businesses are counter-cyclical. Okay, and again, when people use pawn shops, they don't have to go through a credit check. They get immediate cash to cover immediate needs. So the story out of Bloomberg that I think underserved this topic immensely was from Friday, saying that gas prices are weighing on Americans. I know that that's true. I know how much I'm paying now at the pump, and it's insane. But understand, pawn shops offer a timely signal about consumer strain that may not be clear in official statistics, okay, which often mask the experiences of different socioeconomic groups and are typically released with lag.
Not only that, we're also seeing places like Walmart come out and say higher earners are shopping at their stores, which is also suggestive of what this guy's talking about. People falling down that economic ladder and finding ways to stretch their dollar.
For businesses the pawn shop model issue short-term loans in exchange for collateral. They take in your gold necklace, your tool set, whatever is your watch. You leave those things at the store, but you pay huge interest if you do it by way of a loan. It varies from state to state, but the monthly averages range from 3 to 25%, which means that equates to an annual percentage rate of up to, in some states, 300% per year. Okay? Understand that what this article is saying is the middle income and beyond are feeling the pinch right now from what pawnbrokers are seeing. Expensive watches coming in a little bit more frequently, and some of the people who have more money, they say, are also feeling what's going on. Some of the customers are starting to ask for more time to repay the loans, while some longtime clients have begun to default, which means they don't pay the loans and they forfeit their collateral. Let me explain to you now why this is important and what is showing up in the stock prices of the largest pawnbroker operation in the United States, that's First Cash. So let's talk about what's been going on with First Cash's metrics and their data. They're out of Fort Worth. They have 3,300 locations in the US, Latin America, and the UK. They generate 90% of their revenue from pawn operations. But here's the stats that show why this is a bigger issue right now. They posted double-digit earnings growth for the past 4 quarters, averaging 31.25% growth during the period. Revenue growth has accelerated over the past 2 quarters with a 20% increase in the fourth quarter, marking the first time they crossed $1 billion in quarterly sales. This is not a gasoline story, folks. Okay, that was, in first part of this year, and late last year, obviously this conflict hadn't even hit the radar screen yet. So it's much, much deeper than that. The company noted strong same-store revenue growth for the quarter, double-digit growth in pawn receivables and loan fees. Pawn receivables is the money they get in from making loans to people that come in and hawk their goods, not sell them outright, but borrow against them. Retail sales margins remain strong at 43%. Those are the things that they then are forfeited when these people default on their loans, and the pawn shops then sell those items.
That's interesting. So this has been going on before the war in Iran and before this energy crisis, which suggests something a bit deeper. Maybe this problem is a lot bigger than anyone is willing to admit. What would be interesting to know is what you guys think about this topic. Let me know down in the comments below. I'm going to link this full video in the description. If you enjoyed this video, go check out my other video, which I'll link somewhere on screen. Don't forget to like this video and subscribe to the channel if you haven't already. Peace.